The RSI indicator is one of the best momentum and trend identification indicators out there. Known for its simplicity and its accuracy in identifying the speed and change of price movements, this indicator can sometimes work decently even on its own. However, there actually is an improved version of the RSI indicator that also takes market volatility into consideration. This indicator is called Tradingview. In this video, we're going to explore what this indicator is and how we can use it to spot super profitable trades in the market. If you end up finding this video helpful, remember to leave a like. Let's get into it. Now, to add this indicator to your chart, first of all, you want to go to Tradingview. If you need to sign up, link for that will be in the video description. Next, open the indicator search tab and type in Tradingview. Select this one by Dude Owns. Tradingview is a trend identification indicator. It helps traders identify trends in price data by calculating the percentage change of the chosen price source and applying a smoothing to it. This indicator is made up of several different components. Let's go over them real quick. This gray line right here that usually changes color to green and red is called the Arnaud-Lagu Moving Average, or ALMA. The ALMA is a moving average that was designed to have a minimal amount of lag, making it more responsive to recent price changes than many other types of moving averages. This is important because it's going to allow this indicator to filter out noise in highly volatile market conditions, something the RSI indicator usually struggles with. Next, these purple lines right here are called the root mean square, or RMS band. The RMS bands serve as an essential part of understanding the ALMA's position relative to the expected range of the price action. They are designed to encapsulate the normal movement of the ALMA, essentially representing an average magnitude of the trend. By comparing the ALMA to these RMS bands, we can easily determine whether the price is trending or non-trending. Next, we have this line in the center, which is called the zero line. The zero line serves as a baseline for trend identification. When the ALMA band goes above the zero line, that indicates the beginning of a bullish trend, and when it goes below the zero line, that indicates the beginning of a bearish trend. Now that we know what this indicator is made of, the next question is, how can we use it to trade? Well, I'm gonna show you, but before that, we need to customize the settings of this indicator to suit our strategy. To do that, just double-click on it to access the settings panel. As you can see here, the first thing that we can change is the source. The source is essentially the price data that the indicator is going to use to calculate the trends. It could be the closing price, the open, the high, the low, or any of these other sources. For this strategy, we're going to leave it at the default value of close. Next, right here, we have the smoothing. This setting is going to refine our trend signals by reducing the effects of high volatility and random fluctuations in price. A higher number is going to make the indicator less sensitive to price, while a lower number is going to make this indicator more sensitive to price. For this strategy, we're going to keep it at the default value of 1. Next up is the look back setting. This refers to the number of historical candles that this indicator is going to use to calculate the trend. If we increase this number, the trend will appear smoother, reflecting more of a long-term trend. A smaller number, on the other hand, will represent more of the shorter-term trends. So for a good mix of both short-term and long-term trend detection, we're going to reduce the look-back length to 25. And then for the rest of these input settings, we're going to leave them at their default values. Next, head over to the Inputs tab. And here, the only things that we're going to change are the plot colors and these two background plots. Wherever the color is green, we're going to change it to red, and wherever the color is red, we're going to change it to green. Let's do that. After that, click OK. Now, the way this indicator works to identify trends in the market is really simple. Whenever the ALMA band goes above the zero line, that indicates a bullish trend. But whenever it goes above the upper RMS band and changes its color to red, that indicates an overextended bullish trend or an overbought market condition. Conversely, whenever the ALMA band goes below the zero line, that indicates a bearish trend. But whenever it goes below the lower RMS band and changes its color to green, that indicates an overextended bearish trend or an oversold market condition. Now, the way we're going to use this indicator to trade is like this. In a bullish trend, we're going to wait for the ALMA band to indicate an overextended bearish trend or an oversold market condition by going below the lower RMS band. After that, as soon as it closes above the lower RMS band, we're gonna enter a long trade. Now, you may be asking yourself,
but how do we enter short trades in a bearish trend?
Well, I'm gonna tell you, but before that, what broker do you guys use to trade? Personally, I use Trade. As you can see here, this is my trading history. I mainly scalp gold. And up here, you can see that it's actually a live account. The reason why I love Trade so much is because of their extremely low commissions and spreads. On Forex, for example, the spreads can go as low as 0.0 pips, which is the lowest it can go. And for those of you that love high leverage, guess what? Trade offers a maximum leverage of 1 to 500. And if that's not enough, they're also gonna give you a 100% bonus for all your deposits up to $25,000. So if you deposit, say, $34.50, they're gonna give you a bonus of $34.50. So now you'll have a total of $69 to trade with. To access the bonus, as well as all the other perks, sign up to Trade using the link in the video description. Now, back to the video. Now, as I was saying, to take a short trade in a bearish trend, we're gonna wait for the ALMA band to indicate an overextended bullish trend or an overbought market condition by going above the upper RMS band. After that, as soon as it closes below the upper RMS band, we're gonna look to enter short trades. Now, this is good. However, for the strategy we're gonna showcase in this video, the Tradingview indicator is gonna be used to identify trend exhaustion and reversal points based on overbought and oversold levels in the market, which means we're gonna need an overall trend identification indicator. For the final entry confirmation, we could use the ALMA band closing above and below the lower and the upper RMS bands respectively. However, if we used that strategy, there could be lots of false signals. To avoid them, we're gonna need a buy-sell indicator. Lastly, volume is super important. For this strategy, we'll also need to add a volume indicator. Open the indicator search tab and type in volume oscillator. Select this one by Tradingview, that's under the technicals tab. The buy-sell indicator that we're gonna use is called twin range filter. This one by Colin MCK. For the overall trend identification indicator, type in moving average exponential. This one right here. Double-click on the volume oscillator and on the style tab, change the plot color to yellow to increase visibility. Next, double-click on the EMA and on the inputs tab, change the length to 200. On the style tab, change the EMA color to white and then click OK. For the twin range filter, yes, we're gonna leave all the settings at default. Now, to trade using this combined indicator strategy, here is how we're gonna do it. For a long trade, the first thing that we need to do is to establish that the market is in a bullish trend. To do that, we just make sure that this 200 period EMA is angled upwards like this, and the price is trading above it. This indicates an overall bullish trend. Next, within this bullish trend, we need the market to do a pullback to give us an opportunity to enter our trade. Also, we're not just going to be looking for a regular pullback. We need a pullback that causes the market to be oversold within this bullish trend. To confirm that, we just wait for the Tradingview indicator to print a green plot below the lower RMS band. This not only indicates a pullback in the market, but also an oversold market condition. After the pullback, we want the twin range filter to print a buy signal to indicate the possibility of the market continuing in this overall bullish trend. At the time the buy signal is printed, the ALMA band of the Tradingview indicator should be colored gray. If it's colored red, like here, we'll have to skip that setup. After that, we need to confirm that there is enough volume in the market to push the price in the direction of our trade. To do that, we just make sure that this yellow volume oscillator is above the zero line. Then last but not least, as an additional confirmation, if we draw a support resistance level right here, you'll notice that the price bounced off of this zone. This extra confluence is important because it signifies that the market respects this zone as a barrier, reinforcing our confidence in this particular trade. All our entry conditions are met on this candle, so we're gonna enter a long trade here. The stop loss is gonna be set below the most recent swing low. For the take profit, we're gonna set it at 2.5 times the risk. We let this trade run and take profit. For short trades, we're just going to reverse all the conditions. The first thing that we need to do is to establish that the market is in a bearish trend. To do that, we just make sure that this 200 period EMA is angled downwards like this and the price is trading below it. This indicates an overall bearish trend. Next, within this bearish trend, we need the market to do a pullback to give us an opportunity to enter our trade. Also, we're not just going to be looking for a regular pullback. We need a pullback that causes the market to be overbought within this bearish trend. To confirm that, we just wait for the Tradingview indicator to print a red plot above the upper RMS band. This not only indicates a pullback in the market, but also an overbought market condition. After the pullback, we want the twin range filter to print a sell signal to indicate the possibility of the market continuing in this overall bearish trend. At the time the sell signal is printed, the alma band of the Tradingview indicator should be colored gray. If it's colored green, like it is right here, we'll have to skip that setup. After that, we need to confirm that there is enough volume in the market to push the price all the way to take profit. To do that, we just make sure that this yellow volume oscillator is above the zero line. Then last but not least, as an additional confirmation, if we draw a support resistance level right here, you'll notice that the most recent swing high of the price bounced off of this zone. This extra confluence is important because it signifies that the market respects this zone as a barrier, reinforcing our confidence in this particular trade. All our entry conditions are met on this candle, so we're going to enter a short trade here. The stop loss is going to be set above the most recent swing high, and for the take profit, we're going to set it at 2.5 times the risk. We let the trade run and take profit. Now remember, the strategy showcased in this video isn't financial advice. Do your own extensive backtesting and forward testing if you're interested in this particular strategy. If you have any questions, let us know in the comment section below. That's been it for this video. I hope you found some value. If you did, hit the like button below and consider subscribing to stay tuned. Thanks for watching. See you next time.